Hello folks, I'm L.A. Little, and this is your daily TA wrap. Well, we take a look at these markets from a neoclassical perspective and ask ourselves, what happened today and what does it tell us about tomorrow? I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful Rocky Mountains. Folks, there was a question asked this morning, wanted to allow you to, well, it looks like they didn't quite get it in here right, did they? But send text messages, right? So if you want to send text messages, you know, you have 3 ways to interact with me. You can type in here in the chat room, you know, the little chat area there if you log in. If you don't log in, you can send me an email. It'll get to me at support, or you can text it to that number you see there. That will also get to me, and either of those 3 ways, it'll all work. As far as what happened to the markets today, it was a down day. You know, we're really struggling here. Have been struggling, continue to struggle. If we zero in here and look at it, you know, Dow down 136, it's under 15,000 again, 14,936. The S&P's 1676. Composite 3770, down 37. NDX down 20, almost 27, 3215 and a half. And the Russell was the one taking it on the chin, down 12 and a half, almost 1065 and 3/4. We had the dollar down about 1/4%. Bonds were up today. Gold was up today. The metals, most everything was down. You had a little bit of strength in gold and silver and the bonds, and other than that, it was pretty much a down day. Not hugely down, but you know, down a good piece again. That's becoming kind of the story here. I mean, actually, if you go back and you look at the S&Ps off that top it made, it's been pretty much straight down. Well, you know, you flattened out, but there haven't been a lot of up days, and what up days there are, they simply get taken back. Down here at the bottom, you're back into this bar that we've talked about before that you didn't want to see it, you know, you didn't want to see it get into, but it is into it now, and there's no volume, right, as it's coming back. But once you get into the bar, if you stay into it, you know, for a bar or 2, you're probably going to try to reach the other side, or if you get into it deep enough, you'll probably try to reach the other side. Right now, it's not a done deal, but you know, if we get more pressure tomorrow, then this thing's going to be looking more and more as if it's going to finish off that ABCD down that it's trying to do and just hasn't been able to do. Okay, so let's flip around here. Let's see what the Dow looks like. I think the Dow made new lows today and closed at them, and it did. There's no volume as you're coming back. Coming into the bottom bar, the top of this 14,939, we're into it. So the same deal here. You're into the bar. If you don't get out of here right away, you're probably going to try to seek the other side of it. NASDAQ Composite still hanging at the highs, sideways trend. You know, no volume today, folks. You know, I'm seeing it across the board in all these as I'm looking at them now. Let me see what the NDX looks like. Same sort of thing, no volume there. And I'm going to quickly look at the Russell as well. Same story, no volume. So the Russell is actually going to come back into the support zone. That's at high. It's been tested once, so it's really not a retest regen anymore. It tested, regenerated higher already. Now it's simply coming back to do a test of the support area. The big bar on the way back, the bottom of it is this one. That's your 18th of September. That's 1076 is the close, 1058 is the low. That would be the real test on the Russell. Now, you know, the Russell over the long term has been the strongest index. If you look at the sector or the index performance for the year, it is by far the best. And so if we're going to lead it down, you know, you got to watch this one. This would be the, you know, if people got to come out of their positions, you know, they typically come out of some of their winning positions, and that's going to be in the Russell. So, you know, the Russell will lead us up or lead us down. Typically this time of the year, from now until the end of the year, the Russell outperforms. But, you know, I've done studies on that before. I didn't look at the case where the Russell had already outperformed for the year. In other words, was there a correlation, either negative or positive, with respect to the Russell outperformance prior to the October through December period? I don't really know that answer. I just know that in general, the Russell outperforms this time of year. Small caps do. So we'll, you know, maybe we'll take a look at that sometime and see what it is. So in general, you know, we looked at this last night from the weekly standpoint. Weekly still looks fine today. I mean, that hasn't really changed. One day is not going to change the weekly. But what you are seeing is some deterioration again on the dailies, and they're coming back down to test again. And that is hugely related to what we continue to see in Washington, which is we can't make up a deal. And if we can't make a deal here, are we going to be able to do a deal on the debt ceiling? You know, the general consensus still is that they will. But I tell you, if they don't, it's going to be a heck of a shock. Because I'm pretty sure the market hasn't priced in that yet. So that would probably be a shock to the system. Last night, I suggested, and I would stick with that idea, is that you're going to see a move by the end of this week. You got earnings on Friday from two of your big financial names. I don't think they did very well today. Actually, let's take a look at those two. JPM. These both were coming into support. So JPM had already done that, left volume at the bottom. JPM looks like it wants to go test that again. It's hanging down there. It's going to try to take another shot at it. The other one is Wells Fargo. Let's see what they look like. So they're down here testing the lows. They're actually breaking the lows tonight. That's a break under 2 swing points. That can lead to a faster move on the way down. Let me pop this on a weekly. Yeah, you got support all down there, but yeah, it looks like it's going to try to move down into support zone. Probably going to be a buy down there, but in front of earnings, I wouldn't be biting on stuff like this. That's a little dangerous. But yeah, but look at these, you know, the financials, and when we go through the sectors, that's been the weakest sector. And in fact, as I pointed out last night, it's one of the reasons the Dow continues to do so bad is because with their rejiggering and their enlightened wisdom, they've actually made it heavier in terms of the dependency on the financial sector. They're almost 25% now. And if I pop over to that sector and take a look at it, you can see it continues to struggle. So 25% of your Dow now is stuck in financials, which are struggling, which is a huge reason why the Dow is doing what it's doing. I wonder what that does to the Dow theorist, right? Because if you know the history a little bit, if not, I'll give you a short course. You know, when Dow and Hamilton created the indexes, you know, their attempt was to use those indexes to decide if the long-term trends were up so that they know whether to stay with them or not. That became the Dow Theory. In the 1930s, it was codified and a book was written about it, and it was called the Dow Theory. That theory basically says, hey, you're going to produce goods and you got to move them to the market. So what they did is they created back then the REL index, and they also created the Dow Jones Industrial. And so the industrial was the measure of what was being produced. The REL index at the time, which eventually became the transportation index, was a measure of how it was being moved. So if you had goods being produced and they were moved to the market, and those two sectors were showing strength, and back then they really were sectors, then that would tell you that the general market was going to remain strong, and they basically set some rules around it. You know, if the Dow Industrials make a new high and the transports make a new high, then you're going to continue on, or vice versa. If they make new lows and they're confirmed by the other one, then they're going to move lower. You know, the general market's in a bear market. Or if you get a new high in one of them but not the other, that's a divergence and tells you to be worried about a top or a bottom, right? Either way. And so that basically is the Dow theory. Well, now you got 25% of the Dow in the financials, and unless we're really just a paper pusher anymore in terms of financial instruments, I'm not sure if that theory still applies. So anyway, that's a little background. So the IYT coming back, going to come into that support. We thought it might, and yeah, it's coming back. It comes back with a little bit more volume. It's not heavy. This is where it should turn if it's going to turn. Let's look at the semis. They've been the strongest, and they're still the strongest, still hanging up there. Really not giving anything up yet. The XLB. So commodities continue to do okay. Of course, the XLB is broader than just metals. It's also chemicals and things like that. It's just struggling, going sideways, not going anywhere. You got a lot of tails tonight, long tails. So you go up, you go to the top side, and then you finish back down on the bottom. That type of a candle is telling you that the bulls couldn't hold their ground today. So they start out low, they push it all the way back up, but by the end of the day, they're pushed right back down. That typically says you're going to see some more weakness tomorrow. So all of these are probably going to look like sideways days. Some of them are still doing ABCDs down. Some some bearish ABCD. Finance is one of them. Again, no volume anywhere, but these can push lower, it looks like, on a short-term basis on the daily charts. You got an ABCD here as well, the XLI. It's into the support, doesn't have the volume. Again, like the XLB, this is where it should turn, or excuse me, the IYT. If I look at the technology sector, that also is an ABCD down, no volume. They're all the same, every one of them. So they all still have the potential to trade lower short term. And given today's close, now, you know, it's getting hard. And last week, if you remember, I made a totally wrong read from one day to the next, and I'm still reluctant to call this market on a daily basis, given that it's all news flow right now. In other words, if we come out tomorrow and Boehner says that we're not going to tie our grievances over the budget with respect to the debt limit again, and he makes it clear he's not going to do that, then we're probably going to rally. So the news flow is everything, and you saw it today. It was up and down based on news flow. And it will probably be that tomorrow. Here's the XLV that couldn't do anything today. It's right back down. So you go up, you test, you fail, you're coming back down. Now you'll test the support zone. And the XLY was pretty strong. Let's see what it did. Right back down. So, you know, I mean, I can't construe these things as positive. They look like they want to try to trade lower tomorrow, but as I've said already, I think the news flow is everything right now until we get some sort of a closer to a resolution to where the uncertainty is lifted. It's going to be hard for this market to lift. And it's also, as we've already seen, it's hard for them to drive it down. There's just too much in the way of dip buyers out there. Volume just disappears every time you go down. Sellers disappear, buyers come in. Every time you go back up to the top of the range, as you can see here just from the XLY, you start selling it again. And that's been the case now for, what, 8-9 bars already. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, about 11 bars. Quite a few, actually. All right, let's go to the ox markets. So the dollar was weaker today. Let's see how it looks. Little volume pickup. So really not enough. It didn't get into that top, did it? 2161. Just missed it. So that's actually good. A little bit of extra volume, which was not bad on is because it's really kind of pushing higher. Closes lower though, so I don't know. That doesn't really tell me anything either. Let's see if the FXE or Y does. I believe the XFY got over a high. So we're over the highs here. We've been over the highs here. If we look on the weekly on the FXE, this is the euro, just crawling up to the top. Let's see what the FXY looks like. So it's crawling back up to that high as well. No volume. And that price point is 102.08, which is this area, 101.075. So it's actually up higher. So it got over this big bar. It doesn't have the volume, had decent volume today. So now it's coming into this one. That one doesn't have much volume. It's a wide price spread. 235, 187. Well, I don't know. It looks like it should fail, but so far it hasn't. Let me look at the bonds. Bonds were up today. So, yeah, they were up, but it was a bad candle again. These things are stuck. Everything's stuck. It's like a slow motion roll. You know, you roll forward, you roll back. Nothing can go anywhere. Oil, same thing. I think nat gas actually broke out today. Tried to. It got in a pretty nice pop. Into resistance. Fell at resistance. Well, didn't quite fell, but went over this big bar and back under it. Yeah, that doesn't look that encouraging either. Let's look at the ag sector. We're going to have to go to the ag sector to make some money, huh? Here we go. It's over the top finally. Let me look at the broader one, RJA. Where's it at? Here it is. It's got no volume though. Yeah, this, I don't know, even that doesn't look good. Copper. And we saw gold. Let's look at gold and see what they did. So copper's still range trading. Gold. $127.98. That looks like a failure. So you get a failure to break lower, and now you get a failure to get up higher. Doesn't know what it wants to do either. How about silver? Now silver looks a little different. This one is actually yeah, it's back in now. Silver's been stronger. It's back into the bar, and it's pretty deep into it. So that actually is a positive. So the silver's got something going here. It looks like it wants to, and that'll pull gold with it. So metals may move again. What did the GDX and J do today? You know, and I'm kind of just roaming around here, folks, because the you know, there's really no good tells out here. It's still a mixed market. It's been a mixed market for a good, you know, couple of weeks now, and it continues to be. So you got a little move in the GDX. Nothing major. Yeah, it's okay. How about the small caps? Same thing. So they come down into support and they hold. They can get a bounce. So it looks like your metals are going to try to rally. Maybe it makes sense, right? Metals trying to rally as some sort of an alternative investment to the budget crisis. And the problem is that, you know, these are all going to be based on news flows too. So as soon as you see a resolution, if it happens, this thing's probably going to drop. So almost any way you play it, you're playing the news flow right now. So it's almost as if you need to sit on your hands. And honestly, that's pretty much what a lot of us are doing, is we're just sitting on our hands and waiting. I'm going to look at a couple other things I haven't looked at. So, you know, these are some subsectors. Oil services still look pretty good. And I've noticed in my portfolio, these are really doing well. Let's look at what the steel stocks are doing. I haven't looked at them in a while. Not bad. And a few other sectors while we're here. Construction, that's industrial stuff. That's a very thin index. How about the real estate? We haven't looked at it in a while. That's also struggling. The insurance, or actually this is the insurance. Looks pretty much like the rest of them, doesn't it? Really, no great tells here. They're all hanging at whatever levels they are. So if you're, like regional baking, you're hanging at the lower levels. If you're insurance, you're hanging at the higher levels. Whatever you are, you're basically hanging, waiting on clarification as to what the government's going to do. All right, let's take a look at I see an IBB. I have it here, so I'll just do that one next. Question on IBB. So this is your biotechs. Let's see what they're doing. Yeah, see, they're doing the same thing. It's pretty big volume twice now coming off of these. 207.90, 207.94, close it, got under it and back over it. So that kind of looks like it's going to try to hold support, but it's banging this bottom with a lot of volume. So this could actually get into these lows pretty easy. And there's really nothing. This one still hasn't done a retest regen, right? So I mean, a trade all the way back down to here is not a stretch of the imagination. I mean, it's not a huge move, but it could certainly do that. It could do a couple % pretty easy. There's no question on the UUP. I'm looking at Fede bought it, looking for an entry point on NNN. Okay, so the UUP is still hanging and trying to hold support. So really, it's news flow, right? If you get a resolution, the dollar's probably going to rally. If you don't, the dollar could easily break those lows, and that could be a problem because those lows there's two of them on the weekly. If we go over and look here at the NNN to see what this is, let's see what we got here. Okay, so National Retail Properties. Okay, and so you're doing an intermediate term time frame. Yeah, I don't know. That's a hard trade. And I say it's a hard trade because, I mean, you've got some decent volume pushing up here. It's just that you took such a beating, you're going to have a lot of resistance on the way back, right? Anybody that bought, one of the ways to look at these kinds of things is anybody that bought over the last, other than the last month, anybody that bought the prior the prior 4 months are in losing positions. So typically what happens is you get these kind of spikes up and then all those sellers run out, right? They want to get rid of what they have. And so it makes it tough. But yeah, on the weekly it looks okay. If you're that patient, you can do it. You faded back into a buy area here. If you're buying it here, you just simply put a real tight stop on it. It lowers your probability of success, but it keeps you out of trouble. So if you're trading something like this, you just have to keep a tight stop. You have a nice volume spike, so odds are pretty decent that you'll try to get back up there. Again, we're also, when I talk about these, I don't go look at earnings for you, but you got to know what your earnings dates are, because the earning dates are critical at this point. If you're buying something, you have to know if they're going to report earnings anytime soon, and you have to have a plan of what you're going to do if they do it. Because if you don't, you're just asking for trouble. TAN is another one. Yeah, that one has been strong. This is the solar stocks. This one has pushed higher and higher. It's hanging up there. Ever since, if you go back and look at, and you can see it here on the weekly too, if you go back and look at the FSLR, when FSLR reported I think it was earnings that really kicked it off, and I'm pulling up that chart on a weekly. When it reported back here earnings or whatever it was, and that big spike up, I mean that was huge. That was from 25 to 50. I mean that was a double in a month, and this is one of the largest weightings in that group. So ever since that happened, this group has caught fire, right? And so all your smaller ones and so forth, they're just, you know, people are burning to get into these things. So you had a big spike up. Now, this is a pattern I've talked about before. Once you get a big spike up, you know, like you did here, that tends to hold you for a while. It doesn't let you go much farther. And you can see how this spike up, after a nice move, congested for 2 months, 3 months, and then now it's got another one, and what does it do? It spikes up again with volume. And what I'm talking about a spike up is you get a big move, right? Some sort of a larger move up, and volume comes, you know, huge volume. That can define a range, and that's what this looks like. So this is not something I would be excited about trying to get in now. Now this is something you can trade, but you don't try to buy it on quote unquote a breakout up here, because more than likely this is matter of fact, it just failed today. 36.42, you go over it, you close under it, you've already had a big move. This thing's probably going to come back on you. So I would not be messing with this sector right now. You got to let it come back in to play with it. And it can easily trade 2, 3, 4 months of sideways now. FB, so Facebook earnings end of this month, 1% pullback, or wait to see if bad news will take it down more. This thing's been congesting now, just like the market. Of course, it's at its highs. The thing you have to notice about something like this is when you get this kind of a move, right, it takes a long time for the risk to come out of this somewhat. In other words, if you buy it up here, there's a lot of risk. Risk in the sense that you could easily get 5% down or 6% down or 7% down. It doesn't take I mean, if you just trade it back to a good support zone now, that's 45. That's $5 off of 50. That's a big number. You know, that's what is that, 10%? I mean, or what? $5 is that 10? No, it's not 10, is it? Is that 10? Yeah, it's 10. I mean, it can take a big hit fast. So, you know, when you see a chart like this, you have to realize you can take a hit. And so if you're going to wade into something like this, you don't want to get yourself over positioned, because if you do, and this thing you wake up one morning is down 4 or 5%, and, you know, there's a bad piece of news or whatever, you know, are you going to have the wherewithal to stand with it? I mean, that's what you know, you have to think about it from that perspective. It's going to be a buy if it does it, probably. But if you wade in too much up here, right, and then you get hit, that's a bad deal. So you know, I'm just trying to, you know, from a money management perspective, you get something like this, you've got to let it consolidate. You got earnings coming up in 3 weeks. It's kind of hard to wade into too much. If you have none and it's going to cross like this, yeah, you can put 10% of your position on, or 15. But if you're already 30 or 40 in it, I'd be very, very careful. Okay? All right, folks, I'm running out of time here. So again, just as a reminder, for those of you that you are coming in late, we've got pretty much a sideways market. It continues to be sideways. I'm not overly concerned about it, but I suspect you're going to see some sort of a break one way or the other by the end of this week. That in and of itself, with a market that's confused, tells you you need to be careful. You know, if you want to roll the dice, that's one thing, but you know, those dice can come up good or bad. So play your cards, you know, close to the vest, keep it tight, and you know, wait for a better trade. There will be better trades. There's no reason to push your luck here. If you've made money this year, you want to hold it. And then you want to make some more when the opportunity. You can send me 3 different ways. You can type in, as folks are doing here tonight. You can send an email if you want to support anytime during the day. I'll try to take those emails and answer your questions. Or you can text me, 303-912-9110. I'll pick that up and answer those questions as well, giving you multiple ways to talk to me. Folks, have a great one. I'll see you tomorrow night, and we'll see. I think it's going to be a rough day tomorrow to start with. We'll see how bad it gets. Have a great one. Until next time, I'm L.A. Little, and this is and was your daily TA Wrap. Have a great one. Good night.